Hey everyone, it's Evan here from the Trade Risk on Wednesday, April 5th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off with some sector analysis. Now, I hope everybody's doing well out there. Had a pretty interesting day in the market, so let's get into things. S&P 500 SPY ETF finished lower, minus 0.31%. And once again, that was after a reversal that was staged after the FOMC minutes were released in the afternoon. And we'll discuss that in just a moment. Let's backtrack just a few days. Let's discuss where we opened the week and get to eventually today's action. So Monday's session was this candle right here. You can see we opened up the week slightly lower, and sellers had a little bit of a fight in them just to start the week. We probed down all the way to about 234, but equally as impressive, buyers stepped up, rallied us off of the lows to finish just down slightly on the day. Now, yesterday we had an inside day. It was very quiet, not much happening, and we finished just up on the day ever so slightly. Now, the key with today was we were coming off of this inside day. We had a gap above yesterday's inside day and Monday's high from Monday. So we were effectively making new weekly highs here, resolving this inside day to the upside. And generally that micro setup right there, just this little micro price action setup, that generally is good for some momentum in that direction of the gap, of that follow through. And we did in fact get it, because we did trade up to about 237.30 today. And you could see that's essentially where we ended up stumbling. You could look at this trend line that's extending from the all-time highs here in the SPY, and then of course the FOMC, which not only reversed up here and pulled us off of those highs, but brought us back to negative, filled the gap, and closed near the lows. So a bearish day today, all things considered, given where we were and the progress we were making to reverse it all, close on the lows. That is a near-term bearish signal. Now, longer term, of course, not much has changed, particularly if you're going to the weekly time frame. I mean, nothing at all has changed here from a price structure perspective. We're still, consolidating, slightly pulling back here on the weekly time frame. We're above a rising 20 period. All is sort of well in the world on that larger term time frame. If we go to the cash market, again, I still think this illustrates a little bit cleaner here. You can see 2355, 2350. That's the general area of upper level sort of support or a hold, a line in the sand that I'm looking at. Those were the lows here from February, a little bit here from March that we tagged, played around with some resistance here on this initial kind of drop a few weeks ago. And now again, we're just trying to stabilize at it right now. So we're holding on to it. I think for the bulls to remain as strong of a stance there from a price structure perspective, we want to see them not follow through lower below this tomorrow. And again, we're sort of stuck though in between a pretty hard spot, and it's tightening up here between this trend line and this upper level support. Something ultimately is going to give. Now, if we go back to the SPY, let's address volume real quick. We did get an uptick in volume today, and we're starting to see a bit of a pattern here, upticks in volume more consistently on these sell days. So that's something that's fairly notable. Breadth is something that we pay a lot of attention to from a bigger perspective here, longer term breadth trend perspective. Things still look good. They're intact, particularly if you just look at one simple indicator, the cumulative AD line, advanced decline line on the NYSE stocks. That actually was making new all-time highs right in here on Thursday late last week. Meanwhile, price was certainly off of its all-time highs. That was actually bullish divergence there, or some bullish breadth measures. Recently this week, it's weakened up, it's pulled off of highs, but still nothing that extreme. So we're not seeing, we're seeing weakness, of course, today. We saw breadth reversed and move negative today, and it was a little bit negative yesterday and Monday, but nothing, very much out of the ordinary. So Again, sort of some mixed signals. It really depends on the time frame that you're looking at. I think the levels are fairly clear. You have some warning signs with this uptick in volume, the weakening in near-term breadth over the past few days, and today's bearish reversal to either tighten up some long exposure or put some hedges on. It all depends on your time frame. It's going to be very important. So if we go to the IWM, you can see again, this continues to lag here, and it's back to testing this very significant level around 134. Again, these levels aren't meant to be precise, exact, 134.31 or wherever I have this drawn. It's not meant to be, to the penny an exact support level. It's the general area, so you can draw this down here more. You can slide it up. I think if you go to the weekly time frame, you essentially see what we're trying to encapsulate here. It's this sideways consolidation that's been in place since December of 2016. So if the sellers get meaningful follow through, once again, this is, this was the lowest low or the lowest close down here for the IWM year to date, was up back on the 22nd. And, we're not far off of that now. We really haven't gotten any meaningful closes below this line. We're just on the line right here. So if we start to break down here, from this major level, that would be a major red flag. We know the IWM's been lagging, but again, from that bigger picture perspective, it hasn't done a tremendous amount wrong. It's really just not, it's just consolidating. And until it starts to make a move out of this range, that's when we can really start to take action and price structure starts to shift. So if we see meaningful follow through below this level and we close below it, I think that would certainly get the attention of even the longer term players for this particular index. You can see uptick in volume here once again. And if we go finally to the NASDAQ 100, still the strongest, still closing above a 20 period, almost the 8 period, which are both rising and in bullish alignment. Very strong uptick in volume today here as well. Made new intraday all-time highs and then closed below, well, not quite, almost below Tuesday's session. So again, still the strongest here, trend still intact, relative strength very nicely demonstrated here in the NASDAQ 100. So mixed bag, IWM clearly lagging, S&P in between, Qs on the upside. I think you have some mixed signals, but certainly in the short term, there's some warning signs out there. Longer term, you're still in play, you're still holding up. So with that, let's get into some of the other major markets here. TLT, very resilient, staying here at these highs right underneath long-term now resistance. You can see we got a nice base developing here. Looks like it wants to try and make a run for these highs here at this 122 level again. I think you got a nice 2-point range you can play with, and if we do start to get this follow through, you could start to see some type of squeeze here in TLT. Get this open gap back here. So bulls are hanging in there. They're not giving it up. They're not rolling over like we've seen times in the past. That's constructive. If we go to GLD, we'll go to the metals. You can see nice session today, closed green on the day. Nice in the sense that it reversed the downside open. So we opened lower by about a point or two here in GLD ETF at these lows. Buyers stepped up, closed us back at yesterday's highs. It's at an inflection point. It's got this trend line coming down here from, again, back in July of 2016. And you can see it's just bumping up against it, bumping up the highs here from late March. So it looks like it wants to get going, but we still need to get that confirmation. Rising 8 and 20 period. The trend in the short term is to the upside. And silver, very similar situation. There's a lot of talk here about this little inverted head and shoulders, a little bit sloppy, maybe tough to see, maybe a stretch. Either way you look at it, if you believe in that pattern or not, you still have short-term upside momentum here. Trend is up, 8 and 20 period moving higher, and you do have this trend line extending from the late 2016 levels. So silver, once again, still bullish. Tough to be, fighting this at this point. There's not a whole lot of reason to. Weekly time frame also moving higher. If we go to USO today, bit of a reversal, down 0.28%, was up north of 1% earlier in the day. This bounce it's staged back from late last week on Monday, it's continued to move higher. You can see that we're just getting that 8 and 20 period crossover here on the daily time frame, and it finally, this big washout here of an uptick in sell volume and very consecutive sell days have suddenly now retraced almost probably more than 60% of this leg down here throughout the beginning of March to the end of March. So some pretty constructive action there on USO. Longer term, the bulls stepped in at that trend line that we were noting for quite a while there. So that is constructive development in USO. And natural gas also continuing higher in this trend line. Pointed out yesterday that it was starting to break below it, but that's exactly where buyers have been stepping in, and they did. And this was a tough, that looked fairly bearish in the way it closed, below the trend line, below recent lows. And then today, of course, we had that nice move higher up. This was Monday's action. Tuesday was the 5% push higher, and then today, of course, we did try and move higher, but ultimately came back down to within the range of Tuesday. So trend remains higher here as well in UNG. Nice channel that's developed. It's tough to trade, tough to jump on board this, at least the way I look at it, but it continues to work. So congratulations for anybody that's been holding out there in natural gas. And I think that's all of the majors. Let's move into some of the sector analysis. So really, the theme from today is just outside reversal days. And most of the individual sectors are seeing exactly that. If we go to what's strength first, is XLK technology continues, to be the leader here. There's really nothing that changed. You can see again, outside reversal, did make new intraday highs, and then it closed down towards the lows near the lows of Tuesday session. So above the 20 period, relatively still holding up compared to most of the other industries and sectors right now. So technology still strong, but you do have a little minor sort of sell signal or break signal there. XLV still has my attention. Thought I was going to get a trade in this today. It did not manifest itself. Those gains could not hold into the close. Been watching this resistance here as it's based pretty tightly in here, and it was looking good this afternoon, this morning, and again, just like most of everything else, reversed close near the lows. Not much volume on today's session. I'm still paying attention to it, like a lot of the individual components under here, but certainly doesn't seem too ready for me just yet. So I'm just watching it. I think it's interesting, and again, it's vulnerable because again, all this sideways consolidation follow through could, maybe we get a second leg down before this needs to reverse. So we'll have to see how that shakes out. XLF also staying relatively weak here, is particularly on just a relative basis to the other sectors. And look at this uptick in volume. This is pretty interesting here. I didn't notice this until today, but on this, really on this last leg down, we are seeing a nice uptick there in volume. We still have longer term support holding in here, or at least, we're still above this 23.10, 23.15 area from beginning of this year. That's going to be an important longer term, sort of intermediate to longer term level to hold. You get the 20 period on the weekly right about there. So we'll have to see again another outside reversal day, and financials have been on the weaker side. XBI today, biotech also breaking down. You can see this is XBI, the equal weighted. You can see this trend line that's been in place since the election lows here, or November lows, I should say, started to break. We've had about 4 tests of it, and it's starting to break through now. You have this, some sort of micro patterns there if you go down to the tighter, smaller time frames, and you get a nice uptick in volume. So XBI is certainly vulnerable. Go to the IBB and you can see continuing to sort of roll over, maybe a little more of a sturdy level that this one's on right in here at this 287, 286 level, but that certainly weak there. XBI could certainly speak to a lot of the small cap IWM weakness as well, but that's definitely a sector that's got some weakness. And then finally XLU, talk about strength. We're still holding up here. held green on the day, back towards recent highs. Go to the longer term chart. You can see basing up nicely above the 8 and 20 period. I mean, this looks good. A bit of a safety haven here. TLT, you know, with rates potentially on the way back down if TLT starts rising. So all those fun things in play. XLU with some relative strength. So that's the video for today. I hope you guys enjoyed it. I hope you had a nice day trading. If you like the videos, please do subscribe, and hope to talk to you again next time. Thanks for watching.